Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on July 14th. My name is Saunders, and we have a special guest this week. We're thrilled to be joined by James Maund of KraneShares. So, James, I'll give you a brief introduction here, and then let's just say hi to the listeners. So, James joined KraneShares as the head of capital markets in January of 2020. He had more than 15 years of prior experience at other firms in capital markets and kind of ETF trading. Immediately before joining KraneShares, he worked with State Street as within their institutional ETF and capital markets group. And then prior to that, he was an ETF trader at Goldman Sachs. So, James, we're thrilled to have you on here, and certainly a lot of experience. And we're interested in kind of diving into some different aspects here with KraneShares today.
Thanks so much, Ian. I'm really happy to be here. Thanks for having me.
Wonderful. So, James, as I mentioned, I mean, you came into KraneShares in January of 2020. Certainly a pretty interesting time to be moving into a new firm, both on the U.S. side of things and globally, right?
Sure. Yeah.
Obviously, KraneShares kind of has a large focus on China. Now you'll have the climate aspect as well, but a lot of focus on the China picture. And China's certainly seen a lot of volatility, but at that time, and certainly over the past 18 months or so. What kind of things, what are you all looking at when you're looking at the kind of volatility in China? Is there any kind of specific indicators, or what kind of things are you specifically looking at over recently?
Sure. Yeah. So obviously it's a very dynamic situation in investing in China. And, when John Crane started KraneShares, the idea was really to allow access to investors to the market in China, which at the time was a very hard to access market for foreigners. And kind of the DNA of the business has seen that continue on, as you mentioned, through the climate suite and then into some other areas that we'll get into. But yeah, when we look at China and we think about what's going on there, what's driving market activity in China, we do have a lot of resources locally that we speak to. A lot of analysts who are on the ground locally. Brendan Hearn, our chief investment officer, writes a daily note, China Last Night, which gives a little bit of a unique perspective on what's going on in China, whether it's at kind of a high level from a policy perspective with government action, or from an economic level, or even from the level of the individual consumers, what the average kind of Chinese citizen is experiencing and thinking about on a day-to-day basis. So we like to provide that access day to day to give a little bit of a unique perspective versus what you'd see through the lens of the Western media and kind of the headlines you read on China. Because while there's certainly a lot of important geopolitical elements to the relationship between China and the U.S. and kind of the drivers for investing in Chinese companies across the board, there are also a lot of other elements, as I mentioned, that aren't necessarily front page news on a day-to-day basis that we're always staying abreast of. So there's a combination of inputs that we look at. It's not really a short list of metrics that we look at every day, but it's this ongoing, constantly evolving story that's being told that we're hearing from all of these different perspectives.
Yeah, that makes a lot of sense. And I know in conversations with that I've had with Brendan and others at KraneShares over the years, there's certainly a lot of aspects, as you mentioned, that go maybe unreported or underreported on the U.S. side, especially about things that are going on over in China. I know we've seen a lot of interesting price movement from China specifically over the past year to 18 months or so, but we're seeing some areas that are beginning to show some signs of improvement there, but just from a broader technical perspective, as we tend to follow here at Dorsey, right? Are you all seeing anything in particular over there that's kind of leading to maybe a changing of the guard in terms of leadership over there?
Well, yeah, from an investment perspective, certainly we're hearing a much more constructive tone, a much more supportive tone from the Chinese government policymakers around a bunch of different industries. And they recently held a series of large conferences to talk about not just supporting the Chinese internet companies, which is what our largest fund follows with KWEB, but also supporting industrial production in China, supporting the real estate market in China. So really recognizing the broad-based need for government support of all of these areas, which is really constructive, really encouraging, particularly when you think about that in the context of what we've seen over the last couple of years in China where there have been, certainly some elements of the Chinese government looking to seem like, put in more regulation in certain areas to try to help, maybe moderate some of the activity that was going on there. And now we're starting to really see that lift in a much more constructive tone out of the government.
And it's certainly seeming like some of that constructive movement, I mean, it's showing through on some of the price moves, certainly on some of your individual funds. I mean, you mentioned KWEB, the kind of flagship fund, right? One of the larger ones, the largest one I think that you all have, having a pretty solid day, at least at the time of this recording when we're looking at it here. I mean, the fund's up over 4% at the time of this recording. And in looking at us from a more technical side on our point and figure charts, the fund has moved back to a buy signal back on our charts back in June, reversed back up into a convex, kind of showing near-term strength with movement yesterday, and now is bumping right up against its kind of longer term, currently negative trend line, but kind of pushing back toward that, looking like it wants to jump back into a positive trend. So it's good to see that kind of carryover more from the fundamental side over in the technical movement, at least certainly over the near term. I know that KWEB has certainly not been a stranger to a lot of movement over the course of the past several months. And so I know that we want to spend a majority of the time today diving into one of the newer funds that you all have, and that is KLIP, right? KLIP.
That's right.
The similar to KWEB, but slightly different because it's taking the options approach, right?
That's exactly right. So we were thinking about KWEB and the experience that a lot of our investors have had, and obviously, a lot of volatility over the last few years, and kind of thinking about trends in the ETF market and seeing some of the income-focused funds using options to generate income around some of the strategies that have been really popular. And we thought about the experience with KWEB, and why not take that highly volatile experience that you do get with a growth story like KWEB, emerging markets, internet, a lot of areas that naturally would be more volatile, and use that to our investors' advantage and generate some income. So that was kind of the idea behind KLIP, and we tried to keep it as simple as possible. So the fund itself, if you look at the holdings, it just holds KWEB itself. It holds the ETF shares in KWEB, and then it writes covered calls at the money, about 30 days out, and that's about it. It's a really simple strategy. There are a number of other kind of constructs out there for covered calls where you see maybe some sort of an effort to hold all the underlying constituents in an index and write index options. And there are pros and cons to each approach, obviously, but for us, we just wanted to keep this as simple as possible. And what we've seen over time is the implied volatility on KWEB options has been very high relative to some of the other broad-based indices, things like the Nasdaq, things like the S&P, which would allow a strategy like this and has allowed the fund to generate significant income somewhere in the category of 4 to 5% a month. And then over the long term, we've seen that number obviously fluctuate quite a bit. But I'd say the long-term average, if you look back historically, is about 3% per month, which is still quite strong when you think about an income product.
Yeah, absolutely. And so with KLIP, I mean, is this something that, I know that ETFs can kind of be generated in a few different ways. Is it something that someone came to you with this idea? Is this something that kind of was generated internally at KraneShares that you all felt strong enough to kind of bring to market, or how did that kind of originate from there?
Yeah, it was definitely something internally. We're always thinking about bringing these investment opportunities to our clients and looking at trends in the market. And it's something that senior people in the organization are always thinking about new product ideas. And this is something that really came out of a couple of those elements, seeing those trends in the market, seeing how KWEB uniquely has this volatility profile that would allow us to generate income. Looking at just the options volume overall, KWEB tends to be in the top 25 in terms of ETF options volume and notional value of that volume. When we were originally thinking about launching the fund, the notional value of KWEB options trading was averaging about 6 billion notionally, which is, again, a really robust trading environment, tremendous liquidity there. So it just seemed to be like a natural fit. The more we looked at it and thought about it, the more elements came up that made it seem like something that was worth bringing to market.
Mm-hmm. And so, I know that the options-based strategies in general have kind of exploded in popularity especially over the past year or so here in the U.S. I haven't seen that many that are focused on exposure outside of the U.S. I mean, is this in conversations with other individuals? I mean, is this something that people seem to be becoming more accustomed to, or maybe overseas? Is that something that they're even familiar with?
Yeah, I mean, there's a lot of I think there's a lot of understanding of options and awareness of options, but I think in terms of implementing the strategies, we're just scratching the surface. And something that's interesting in our conversations with a lot of our clients is, again, there's this awareness and a level of comfort, but thinking about the right way to implement. I mean, obviously there are a multitude of different things you can do, given all of the elements you can adjust for, all of the kind of different outcomes you can construct, or expected outcomes you can hope to achieve with options that go beyond just investing in single stocks. I think for many years, people got to the point where there was just like too much on the plate, and deciding what the right strategy was, or getting comfortable with one strategy among millions or billions of potential strategies was a big challenge and overwhelming. And again, that's why we tried to keep this product as simple as possible, as straightforward as possible, just because we frankly, we don't need to do much here. Holding KWEB, writing calls at the money 30 days out, keep it about as simple as possible, have a framework that's easy for people to understand, that they can have a high level of comfort with, and then just produce that income is really powerful. And from there, obviously, we're constantly having conversations and thinking about new ideas, different strategies that we can bring to market using options. So I would certainly say that there's a potential to do more beyond this.
So is that potential to do more? I mean, in the kind of still international, like across other China-focused funds that you all have, in that kind of vein?
Yeah, that's certainly, the products where we're focused, the areas where we're focused. I think equity investing, whether it's U.S. equity investing, global equity investing, emerging markets equity investing, from a structural perspective, there are operational kind of wrinkles and nuances from one region to the next, but at its core, it's something that's translatable and transferable across all markets. And it's just a matter of figuring out the right way to implement the strategy, whether it's, again, index-based or based on an ETF, or whatever else might make the most sense from all of those perspectives. But certainly, I think the appetite for options embedded ETFs, where they're based on U.S. indices or international indices or anything else, certainly seems to be growing.
Mm-hmm. And so, how would you envision or kind of suggest fitting something like this into a portfolio? Just probably don't want to just sell KWEB and move out of it, or or is it kind of an either or type of deal, or how is that best being represented by the advising community?
Sure. So the beauty of the KLIP strategy is that it represents the other end of the spectrum, kind of from an investing philosophy, versus KWEB. So KWEB is high growth, high volatility, high growth. It is not an income strategy. KLIP, on the other hand, is really purely an income strategy. There is that element of exposure to KWEB and to China, which is important. But the real goal of the fund is to maximize income for investors. So if you think about kind of those two ends of the spectrum, whether you have growth or income, KLIP allowed us to provide that income element to investors, which I think was hard to find, frankly, in terms of an options embedded fund, a fund that's investing at its core in equity exposure and then producing that income from options. So they're, as is the case with most ETFs, they're tools to achieve an investment goal. So for KWEB, it's the growth driver, and for KLIP, it's the income driver. And depending on the investor, as many investors as there may be that many opinions about how to weight those two elements in the portfolio to achieve whatever those goals are. We certainly have many longtime KWEB investors who are really excited about the prospects of kind of breaking out of this range and having that upside move and experiencing that tremendous growth. And that's phenomenal. And they're probably going to be mostly in KWEB. We have other investors who really, don't have that interest in growth and just really want to clip a coupon and experience that income. And they're probably going to be heavily weighted, if not entirely weighted, to KLIP. And then we have that whole space in the middle where you're going to have some combination of the two, whether it's people who believe in the long-term fundamental story of KWEB, but want to get paid to wait. So they'll invest in KLIP and kind of keep that China exposure on their radar in that form. And then maybe over time, if KWEB starts to break out, shift some assets from one to the other, or anything in between. So we really think about it that way. And it's been interesting having conversations with traditional KWEB investors who may have an income bucket and haven't considered investing in this manner, or using an ETF, or maybe using an ETF from our offering in that income bucket, where now KLIP provides that. And then we're also open to this whole new class of investors who are maybe not at all focused on growth, but really like that income. So we're opening new conversations with them specifically around KLIP.
Very nice. And so I know something that you did mention as well in looking at the, I just want to circle back to it on the, in terms of the distribution and the kind of the yield aspect of it. You said it's a monthly distribution. Is that right?
That's correct. Mm-hmm. Yep. So we paid on the last business day of the month has been our pay date, with the record and X dates, on the calendar days immediately prior to that, 1 day prior for record and 2 days prior for X. And
so I know with the kind of variations and the ways that the yield can be communicated, right? You can see the current yield at almost a 52%, versus SEC yields a little bit different, right? So what kind of, I think you mentioned as well that the kind of average distribution, you said it was around kind of 3 to 4% historically on a monthly basis. Is that right?
That's the long term. Yep.
Okay.
And we've seen volatility fluctuate, quite significantly over the years. So since we launched the fund, we launched in mid-January of this year, and we paid a partial month dividend to start out in January. We wanted to get that income flowing out to investors as soon as possible at the end of that first month. Excuse me. And then having the full month, the first full month, we paid just over 5%. And we've been right in that range, right about around 5% for the first few months. And then we've seen volatility kind of come in a bit over the last month or two. So I believe our most recent distribution was just above 4%. And that's, again, well within the range of what we would expect. If we see spikes in volatility, we may see a higher payout on any given month. And if we see volatility kind of, dissipate for a period of time, we may trade toward the lower end of that range, or may, experience distributions toward the lower end. But that's, generally what we've seen and what we'd expect to see.
Got it. And I know that, just for those that might be following along on our research platform, we do have KLIP up as a ticker that you can pull up there, but would urge you to look at the KLIP.TR ticker, which is simply our total return ticker that includes that assumed reinvestment of those dividends, which the chart looks pretty nice. You can certainly see that kind of effect from the distribution perspective. Breaking a triple top, as we would call it here, moving back into a positive trend with movement a couple weeks ago. So certainly not a bad looking picture, and quite a bit different than a lot of other broader China representatives, I would say that we've seen. So not looking too shabby from a technical perspective there either. So James, if anyone wants to know anything else about this fund or about kind of KraneShares in particular, what would be the best option for them where would be the best place for them to go to learn more about it?
Sure. So we have a website, KraneShares.com, that contains a lot of information about all of our funds, including the holdings on a daily basis, as well as detailed presentations and a lot of FAQs and other information about our funds. And then there's always the option to reach out to us directly, info@KraneShares.com. If there are any specific questions, we're more than happy to address any of those that may come up. And we're just really excited, about the level of interest and kind of the opportunities that we're seeing here.
Yeah, there as well, and thrilled that you're able to join us here and able to continue to kind of help us learn more about the investment in the China space. I know you mentioned before, but Brendan's kind of daily commentary of the China last night. I know that's a great opportunity to kind of learn what's going on while we were sleeping, right? So that's something that I try to look at each day as well. You can find that on the sign up for that on the website as well too.
That's correct. Yeah, and there's also again, that piece is about a one pager, so it's a really easily digestible. It's no more than 5 minutes, and you're pretty much up to speed on what's gone on overnight in China, as you mentioned. So it's a great resource.
Yeah, absolutely. Well, James, anything else you want to add to kind of throw in here at the end as we wrap it up?
No, I just, thanks again for having me. And, it's a really exciting time for us here at KraneShares, both given the positioning of KWEB, been range bound here for a while and starting to see a lot of, positive headlines, positive macro trends coming together. And, hopefully we see some positive technical action as well and a breakout here in the near future. And then again, with KLIP, strategy that's growing rapidly, that's garnering a lot of interest. So we're grateful to have that product in our stable as well. So
yeah, absolutely.
I leave it there. Yeah.
Wonderful. And if any of the listeners have any other kind of questions about the aspects we were touching on there on the platform, as always, please feel free to reach out to us as well, either by our phone line or you can reach us at dwa@dorseyright.com. So with that, James, I think we'll probably land the plane there. So thank you very much for joining us this week. And to all the listeners, thank you very much for tuning in to our first podcast in the second half of the year. So it's good to have you on there, James. And thanks for everyone for listening. And we'll be back to talk with you again next week.